All right, guys, so we are getting everything set up. We will be getting started in just about like 3 or 4 minutes here. We are using a really cool new technology called live stream today. So bear with us just for like 3 minutes. We do need to get 1 or 2 more things set up, but we will be there very soon. Thank you, Jeffrey. Bianca, we appreciate you sharing the video. Thank you guys so much. This is going to be a super cool broadcast, so just stay with us for like 3 or 4 minutes and we will be right back. Hey everyone, welcome to Deal of the Day. My name is David Meyer, coming to you from BiggerPockets live here in Denver. What is going on, everyone? Welcome. This is going to be a different type of broadcast for us today. We're using an entirely new software called Livestream that is going to enable us to do all sorts of cool stuff. We are currently streaming to tons of different audiences around the country. We're going to be able to use multiple cameras. We're going to be able to bring in graphics. As we get more sophisticated with this software, we are going to be able to bring in multiple guests. If this is your deal on Deal of the Day, you're going to be able to call in soon. So this is super cool. We're really excited. Hopefully this thing goes off without a hitch, but we might have a couple of technical problems. It's our first time using this software. So please bear with us today. We're very excited to have you guys here. Please let us know if you're here and you're excited, and by posting in the comments section, liking. One of the main reasons that we have been able to invest in this software and invest in this new setup to do the Deal of the Day is because you guys come out every single week. You join us on these sessions, you write comments, you share it with your friends, and that is what enables us to continue doing these broadcasts for you. So before we get started today, please like, comment, and most of all, share with your friends. The more people we can get watching these types of things, the cooler stuff that we can do with it. We can get multiple cameras. We can invite you guys to join us. We can do all sorts of cool stuff. So I'd love to see at least 25 shares today. Last week, what we get? 41 or something last week? I want to beat that. Let's get more than 41. Let's get 45 shares today. Let us know if you share it in the comment section. We'll call you out, and we'd really, really appreciate it. That being said, we got an awesome deal for you guys today. It's coming right here from Denver, Colorado, and it's a duplex house hack. So for those of you who are not familiar, first of all, with Deal of the Day, here's what we do. We find a deal. Most of these deals are submitted to us on the BiggerPockets.com forums. So if you have a deal, go on BiggerPockets.com/forums. It's one of the top forum posts you'll see there, and tell us about your deal that you're interested. And if you guys provide enough information about the deal, we will pick it to actually be streamed live here, and we will analyze the deal for you. And you can possibly even join us on the set, and you can stream and become a YouTube or Facebook celebrity. All right, so that is the first thing. And if you do go on there and post one of your deals, give us as much information as possible. We want a listing. We want the loan amount, how much you intend to put down. Does it need repairs? What are your expenses? The more information you can give me, the more I am likely to pick your deal, and we will go through it live on air. All right, guys, so let's talk a little bit about this deal. Investors. I think it is one of the best, if not the single best way to get interested and involved in real estate if you are new. Craig, thank you for sharing this video. We much appreciate it. We want to get at least 40 shares on this video, everyone. So please help us out. Make it clear that it was worth this investment we made in all this new technology by sharing, liking, and commenting on this deal. All right, so house hacking. What is house hacking? Basically, it is a type of buy and hold investing or rental property investing, but it is where the owner lives in the property. And so you can actually do that in two different ways. The first way is by buying a single family home and living in one of the bedrooms and renting out the other. So if you buy a 3-bedroom house, you live in one bedroom, you rent out the other 2. The other way to do this is by buying a multi-unit property. You could buy a duplex, a triplex, or quadplex and rent out the other units that you are not living in. This is an awesome strategy for several reasons. One, and this is really important, so definitely pay attention to this thing. If you are buying a quadplex or under, so 4 units or under, you still qualify for a traditional residential loan. So you can actually get an FHA loan or a traditional 20% down conventional loan and buy 4 units. So that's incredible. You actually get an unbelievable amount of property with still being able to contain the amount that you have to put down for that deal. So that's one reason. The second reason is this is a great way to learn how to be a landlord. If you are new to real estate, becoming a landlord, it's not rocket science by any means, but it does take some time to actually get used to it. So living on the property just makes it easier. You don't have to drive every time something breaks. If you want to mow the lawn, it's right out your front door. This is a great way to learn the business of being a landlord, and I promise you'll learn it pretty quickly. Again, it is not rocket science. This is something that is pretty easy over time. It just takes a little bit of practice. So that is what we're going to be talking about today. We have this deal from Craig Curelop, and we're going to be going through that. Before we get into the details of the deal, again, guys, we want to get a lot of likes and shares on this. We are testing out this entirely new technology today, and we would love to see you guys promote it as much as possible. This is really exciting for us to be able to do this, and we want to get as many people to view this as possible. And with that said, let's get into the deal. So the deal today, again, is brought to us by BiggerPockets member and actually a BiggerPockets team member, Craig Curelop. He is our new financial analyst. He's sitting, I think, right behind this whiteboard right now. And I think he is listening and participating as well. So we appreciate that. And his agent, Kevin Grinstead of Keller Williams here in Denver, brought us. So thank you, Kevin Grinstead, again with Keller Williams. Really appreciate you bringing us this deal and finding this deal for Craig. So Craig wants to find a way to get into real estate investing. This would be his first rental property, and he found a deal that he is very interested. So we're going to go through it and evaluate it for him and see if we think this is a good deal for Craig to buy. All right, so what the deal is this is a duplex, and each one of them is 2 1 bed, 1 bath. Can you guys see that, the green marker? I think it's a little light. I'm gonna go blue. Bear with me, guys, 1 second. All right, so we have a duplex. I think that's better. And then it's each one is 1 bed, 1 bath. This is in a really interesting neighborhood of Denver. It's in the Skyline or Whittier neighborhood. It's kind of the borderline, but it's a really good area, I personally believe. Prices are still a bit lower than the rest of downtown Denver, but there's really good housing stock. It's close to a lot of jobs. It's close to schools, parks, golf courses. It's a very desirable place to live, and that's obviously something you want to think about when you're going to be renting out your apartments. So the listing price was $399,900, but Craig can get this under contract for $385,000. Awesome. Also getting it under listing price. Kudos to Craig. So that is basically what the deal is. The other part of it is that this is fully renovated. We actually went and saw it a couple of days ago because I've been helping Craig out, and we're filming some other stuff for BiggerPockets for you guys to see about this. And it is brand new. Everything is super nice in there. So just right off the bat, you know that expenses, repairs, CapEx, that kind of stuff is probably going to be pretty low. All right, so that is what we have for the deal. We also know that the closing costs are going to be about $12,000. And how do you know that? You know that by talking to a lender. One of the main things people ask me when they're asking how to get started in real estate is, who do I network with? Who should I be talking to? And I usually say that the lender is one of the top people that you should be talking to first. You will know what you can qualify for, how much closing costs are going to be, and all that good stuff. Guys, please, we want to see you guys commenting. Last time we were having comments all the time. We were getting shares. I see Michael, I see Craig, but come on, guys, let's get involved. Let us know, ask questions. We do these things because we want you guys to participate. And the reason we do this live is so that you guys can ask questions. So please like, share, all that good stuff. We would really like to hear from you guys. What do you guys think about house hacking? What do you look for in a deal? Please share your thoughts. It will help us continue to make these videos. All right. He's also going to, the interest rate is 3.5% down and amortized over 30 years. All right, so that's the basics of the deal. Really pretty awesome. Thank you guys. I really appreciate all these comments. Thank you. It really helps us out. It makes me feel good about myself, you know. So all these good things. Yeah, we could definitely do some events. Thank you, Micah. Good ideas. All right, so the income, let's get to this part. So Craig has done some research, and one unit, it's a top-bottom duplex. So one is above ground, and that is going to be the more desirable because there's going to be more natural light and there are higher ceilings. There's also a basement that is very nice, but it's going to have lower ceilings, less natural light, probably going to get a little bit less rent. So what he is projecting is that for the upper half, we're going to have $1,750 per month. So for those of you who don't live in Denver, yes, this is real. This is crazy. A one-bedroom, one-bath place in Denver actually goes for $1,750 a month. Some people would steal that. This is a steal, actually, depending on where you live. But this is pretty awesome. Thank you, Robert. Very good call out for making me look like an idiot, and you're right. All right, yes, Bianca, you can join the house hack. You can do a house hack for in-law quarters. That is a really good way to do it. One thing you look for in cities like Denver is that you have accessory dwellings. So you can have a garage that you can redo and you can house hack. Or you can, as long as the zoning permits it, you want to check to make sure it's legal. But most times you can do that. And that's actually one of my favorite strategies, is to find people or find properties where you can add an extra unit. It's a really, really cost-efficient way to get into multifamily investing. So great question, Bianca. All right, so the lower one, and Robert, I will put the $ on the correct side because this is America, as you pointed out. We think that we could get about $1,300 for the basement unit. So as you can see, just the fact that one is above grade and one is below grade, that's a pretty big discrepancy in pricing, right? You get $450 per month difference. That's $5,400 a year difference just for those two. But both are really, really solid rents, especially as we're going to start talking about, you get into how much Craig is actually going to have to be paying on a monthly basis. All right, so the total income Craig can get here is just over $3,000. We have $330.50. Solid. I'm already liking this deal. I mean, that is a lot of money to be coming off of just a duplex. And for what he's putting down. So really exciting. Also want to give a shout out to Gerard Jemison, who I can see just joined, who is one of my teammates here at BiggerPockets and graphic designer. Designed all the cool new graphics that you're going to be seeing here on the new Facebook Lives and YouTube Lives and all the live streaming that we're going to be doing. So anytime you see our logo or cool graphics come across, that is Gerard. So big thanks to him for putting that together. All right, so expenses. Let's talk about all the expenses. First things first, the big one, which is the mortgage. There are a couple different parts of a mortgage, and we're going to break that down for you guys so you can see which parts of the mortgage are going to cost you what. All right, so principal and insurance, that is the main part of your mortgage. That's really what you want to be thinking about in the first place. Principal is how much you are actually borrowing from the bank that is going to the seller. So for Craig, his loan amount was $378,000 about. So he is borrowing $378,000 from the bank, and that is what he is borrowing. Then on top of that, there is interest, and that is the profit that the bank makes. So that is an important distinction, because every time you send a payment to the mortgage company every month, you are paying down some of the principal, which is the amount that you actually borrowed, and you're also paying the bank their profit. They're not doing this for free. And as time goes on, you pay more principal and less interest. So that is called amortization. And I highly recommend, if you guys are thinking about getting into real estate investing, learning a little bit more about how an amortization table works, because that will make a big difference on deciding when you should sell, how long you should hold on to a property. But so principal and interest, which you usually combine together because it stays the same throughout the lifetime of your loan, is going to come out to about $1,700. And guys, these numbers are not exact. I think this was like 1697. I like to round just so everyone here doesn't have to look at small decimal points. It makes it a lot easier for everyone, but it's about $1,700. Next, we have PMI, which is mortgage insurance. So not every mortgage is going to have PMI. If you put 20% or more down on a mortgage, you typically can avoid this type of payment. But that being said, if you put less than 20% down or do an FHA loan, for example, you have to pay this, and that's okay. That's absolutely okay. As long as the numbers still work, that's really great. So we have PMI here. So this is going to be principal and interest. And then we have, it's 260 for that's PMI. Guys, thank you so much for the comments. We really appreciate it. Troy, glad you like the camera angles. This is my main man, Zach, who has set up this new system that we have. Multiple camera angles. Hopefully we have more. We're going to have multiple guests. All sorts of cool stuff coming for you guys in the very near future. As much as you guys can share and comment and participate, this is what allows us to invest the money into this kind of cool stuff. So again, thank you guys so much. Hillary, thank you. I recognize your name from last time we did this, so thank you for coming back for this session of Deal of the Day. I love seeing people. Yeah, Troy, thank you for giving Zach a shout out. He deserves it. He's worked very hard on this. All right. For insurance, the next thing, that is going to be $90 a month. I think everyone knows what insurance is. All right, and then we have taxes. Pesky taxes for $240. Denver taxes are pretty low, but they are going up a lot. I was talking to Craig about this earlier, actually, and it's gone up like 20%. It's hard, but Denver's taxes relatively are still really low, so it's hard to get too angry about it. The last thing is repairs and maintenance. And so Craig is estimating that he's going to spend about, where do I have this? About $600 a year in maintenance. And so normally I would say this is pretty low. Usually you want to have a lot of money, but everything is brand new. It's like super, super new. Every appliance is new. Every floorboard is brand new. So we're not expecting a lot of expenses, but you do want to have a couple $100 set aside to make sure that you are covered in case of an emergency. It's really important. So that's what we have here, repairs. All right. So all of that comes out to $2,510. And that is the total amount of expenses here for Craig. Okay, so let's start talking about profit. But before we do, I just had a comment from Jeffrey that said, can you analyze a 15-unit deal for me? Jeff, please post that in the BiggerPockets forums. If you just go to biggerpockets.com/forums and can go through and find I think it's the second one from the top. It just says submissions wanted. Please put as much information as you can into that. I don't think we've ever done a 15-unit deal, which would be awesome. Micah, he is accounting for $600 a year, and I know that is very low. That is what I said to him, but we're gonna do what Craig wants to do, which is $600 in repairs. And I have a feeling, just based off these numbers, that there is a cushion here that Craig is going to be making such a pretty good amount of profit here, just eyeballing this. And if he has more repairs, he'll be covered there. Okay, Michael asked a question. Owner occupant, is that why such a low down payment? How much would an investor most likely put down? So, okay, owner occupant, you can put less than 20% down pretty easily. So if you want to invest not in a place you're living, typically you have to put 25% down, 20 to 25% down. It can depend on whether or not you are have a relationship with that bank, what state you're in, what your track record is. But a pretty good rule of thumb is if you are investing in a property you're going to live in, you're eligible for anywhere from 3.5% down up to 20% down. You can obviously put more down if you want, but that's sort of the typical range. And if you are investing in a commercial property or a second home or something like that, it's usually 20, 25% or even higher depending on the type of deal. So that's just something to keep in mind. You are asking about expenses. This is the monthly expenses that we are projecting. I do agree these repair numbers are pretty low for Craig, but it is a really beautiful new property, so if he thinks that's right, I'm going to trust him on this, and we'll see. If there's a high profit, I think that maybe the deal will still be good. However, given this low estimation, if there's no profit and it's a close deal, you might want to look away from this one. So just keep that in mind as you're doing this. Again, thank you guys so much for watching. This is a new type of deal that we're doing today. This is deal of the day. We're trying to do this more and more, and by sharing, liking, and commenting, we do get to do this as much as possible. The odds that we will pick a deal that you are looked together will be awesome. Oh, that is a really good point, Micah. Thank you. You are absolutely right. I switched from 600 to annual to monthly. You're 100% right. Thank you for doing that. So 600 divided by 12 is 50. Yeah, it's $50 a month. Okay, so sorry, just doing that. Thank you, Micah. I really appreciate it. This is really good. Awesome. I will see. Let me try black ink. 1 second. I'm seeing that people are not able to see this. Nope, that's even lighter. We're going to have to buy some new markers for this. Maybe we just need to get the thicker marker. Is that better? No. All right, I'm going to have to just stick with the blue for now. We will get some better markers for next time. Okay, thanks, guys. So we are going to now go into the profit. So we know two different scenarios. In house hacking, you really want to look at two different scenarios. The first is owner-occupied. As I said, house hacking by definition means that it is owner-occupied. But that doesn't mean it has to be that way forever. You might want to refinance, move out, buy another property. So you want to analyze the deal for both owner-occupied and non-owner-occupied. And since owner-occupied would be first, is what we're going to do right here. Okay. Alrighty. So 2510 is our amount of expenses, but we're going to take 3050. But remember, Craig is going to be living in this bottom unit now, so we're not going to be making this $1,300. So we're going to get $750 only for the owner-occupied. So if you take $1,750 and then subtract the expenses of $2,510, I'm just going to round this to $2,500, guys, just for the ease of math. We get negative $750, right? So as of now, that doesn't seem like a great deal, right? It seems like you're losing money, which you are technically. You are coming out of pocket. But the interesting thing about analyzing a house hack is that you have to remember that this is not necessarily a bad deal, because Craig, for living in a similar one bedroom in Denver, is going to be spending at least $1,000 a month, if not $1,300. So for the purposes of this exercise, we are going to assume that Craig would be renting a similar apartment for about $1,300 because that is the market value. It's $1,340. Sorry, guys, I wrote this down beforehand. I'm not sure if I'm doing this wrong live, so let's just go back to 13. I will redo this. I'm going to round it to 1350. 2350, is that what you guys are saying? Yeah, 23. Appreciate it. Thank you, guys. So that's going to be 6. So that's going to actually be negative 600 instead of negative 750. All right. So again, what I was saying is that you are probably Craig would be spending $1,300 a month on his living expenses. So you actually have to add that back, because instead of spending $1,300, he's only now spending $600 on his living expenses. So if you actually figured out, that is a net profit of $700, right? So he actually comes out $700 ahead on this deal. So I'm already loving this deal. I think this is amazing. Think about how much money Craig put down, which is not a lot. And I think I figured it out before. Apparently, I'm not very good at doing math on the spot. But it came out to about 30% cash on cash return for this type of scenario. That's unbelievable. So I'm already loving this deal. That means that when Craig moves out, his profit is only going to go up. But let's just run the deal anyway as a non-owner occupied deal. So remember, it was 30/50, 30/50 for the income if Craig does not live there. You subtract the 23/50, thank you guys again, and that comes out to a positive $700 a month. Interesting. I've actually never seen that before. It comes out to about the same amount. So this way, Craig, either way, he's either saving $700 a month if he lives there, or if he eventually moves out, he is going to come with $700 in pocket. So that is an awesome deal. A lot of times on this deal of the day, you'll see that I waffle back and forth and I say, maybe this is a great deal. I don't really know. But honestly, this is an awesome deal. I mean, if you are making this much money and putting, I think he said, it's only like 12 grand down. Yeah, he's putting like 12 grand down. Is a really, really good deal. I mean, you're making an incredible amount of money for that cash on cash return. So, good question, Michael. Michael asks, what's the formula for cash on cash return? So basically what you want to do is take the amount of money you are making and divide it by the amount of money you are putting down. So I will just write a basic example here. So let's say it's $700. 7 times 12 is, God, why can't I do math? $8,400. So it's $8,400 a year, right? So you're making $8,400. Let's say that Craig, I'm not sure off the top of my head what Craig put down, but just for the ease of math, I'm going to say that he put $16,800 down, right? So he put this down. This is down. This is make. You divide this number by that number, and you get 50%, right? Obviously, I'm making these numbers up just so I can do the numbers for you guys. But this is 50% down, right? So that's a 50% cash on cash return. That is unheard of. When you're evaluating any investment, not just real estate, you want to think about other opportunities. So if you put your money in the market, the stock market that is, you could make 7, 8, 9, 10%, something like that, maybe 12%, who knows. But what can you make in real estate? In this hypothetical example, you make 50%. In Craig's example, he's actually making like 30%. That is way better than you can do in the stock market. This is one of the reasons people like me and Craig and all of you, because you're here watching, get so excited about real estate investing, is because there is an opportunity to get an incredible return on your investment. So that is really, really exciting. All right. Chuck asks, what about accounting for vacancy or property management fees? Value of your own time if self-managing? Very, very good question. So a question is, what about some other fees that we didn't incorporate here? So Craig is not counting for vacancy right now because he has a tenant. There's a tenant in place for this building, but you might want to do that. In Denver, we see extremely, extremely low vacancy rates, but you're right. You should account for at least some vacancy, maybe a month's rent for your less expensive one. And I think you really, really are wise to say that. So very good point. Property management is up to you. Craig is going to self-manage. I personally self-manage. I still only have 3 buildings, 8 doors. So it's manageable for me, no pun intended. But so I think you just need to know what your personal strategy is. If you start to get to 10, 20, 30 units, it probably becomes unreasonable for you to manage it. So that's when you want to start thinking about a property manager. The other thing is time you asked about time if you self-manage, which is a great question, but that's a great question, but I don't really have a way of knowing what your time is worth. If you work hourly, sure, you might say, I make $50 an hour, I make $20 an hour, and if I go manage this property for an hour, that's $20 I could have made. That's a perfect way to evaluate that. If you work a 9-to-5 W-2 job, you might not be able to do that. So it's really a personal calculation, but you're right. Those are absolutely important things to do. So guys, I want to know right now, would you guys buy this deal? So I think it's a good deal. I think Craig thinks it's a good deal, but I want to know if you guys think it's a good deal. Give us a thumbs up. Put it in the comment section. Would you buy this deal if you were in Craig's shoes? What do you think of this deal? All right, we'll see that. Okay, so is it reasonable to accumulate rental properties by moving from owner-occupied to owner-occupied multifamily? How difficult is it to get lending after the first property? Excellent question, Matthew. So what Matthew is asking is, how easy is it to go from owner-occupied house to owner-occupied house? So you can't have more than one at a time, obviously. You can only have one primary residence. So what you have to do is, if you want to move out and acquire another property, you have to refinance. And that can be easy, that can be tricky. It totally depends on your financial situation. But what you would do is refinance into an investment property. And typically you need to put 25% down for something like that, because that is a commercial loan when it is an investment. So if your property has accumulated equity, has accumulated value, then you can refinance without putting any additional cash in. And sometimes you can actually do cash out. I'm not going to talk too much about that today. We actually talked a lot about that in the last deal of the day. So if you want to know anything more about cash out refinancing, check that out. Or maybe, Zach, we can do this on one in the next couple of days, something on cash out refinancing, because it's something I've used several times, and I think it's a really great strategy. So very good question. Again, I saw a lot of thumbs up from people saying that they would buy these deals. I didn't say any thumbs down. I don't even know if that's a thing on Facebook. I guess it's a frowny face if you don't like it, or a crying face, something like that. But I'm seeing a couple more thumbs up, so happy to see that people agree that this is a good deal. So if you number as investors, good question, Michael. I don't have the numbers prepared for that today, but that is a very good point. That it's something we can do in the future. And I assume you mean doing it as a 25% down financing rather than doing it as a owner-occupied. But I like that comment. I think that's something we can definitely bring to you guys in the future, is a couple of different financing strategies, and we can all talk about which financing strategies are best. I really love that. Thank you for contributing that. All right, guys, so this is the deal. I'm really happy that everyone is here. Do we have a quick video for them, Zach?
No video, but if you want to show them live, you definitely can.
The pro thing?
Yeah.
No, sorry. So we're trying to queue up a couple of things, but I think we're going to skip that for today. We'll do this again next week. So thank you guys for being here. We really appreciate it. Doing these live events is a lot of fun for us. If you can like and share and comment, it really, really helps us out. It allows us to make these videos. Thank you for participating. The more comments and back and forth, the more fun this is for us, the more everyone else learns. So thank you for being here. I'm going to go tell Craig that we think this is a great deal. Hopefully he's still listening to us. Before we go, this is BiggerPockets. It is a free resource to all of you. If you are not familiar with it, go to www.biggerpockets.com. All of our education is 100% free. If you are interested in becoming a real estate investor, go to biggerpockets.com. You can learn anything you need to know. You can network, you can find partners, you can find agents, all this amazing stuff. You can learn how to analyze deals. You can take courses. It's an amazing resource for anyone who has even an inkling of interest in real estate investing. So please go to biggerpockets.com, join the forums, join our community, and help yourself become a real estate investor. So thank you again for being here. My name is Dave Meyer. I'm here from BiggerPockets, and this is Deal of the Day. And please join us again next week for the next deal.